with revenues down 6% for the 9 months up to September. Joining me now is Maher Qubain, CEO of Starcomms, to take a look at those numbers. Thanks a lot, Maher, for joining us as always. Let's look at the Q3 numbers. First of all, we see revenues down about 6% compared to Q2 numbers. 7.7 billion is what I calculated for Q3 revenues. Is that still a case of voice tariff pressure and, of course, your expansion costs?
Well, thank you, Wole. It's a pleasure to be with you again. To put things into perspective, 684 million of the decline was related to the change in the interconnect regime, which then resulted in lower interconnect revenues purely because of the price drop. However, on an overall, that was offset by the amount of outgoing payments we had to make to other operators. It was offset where we made a beneficiary portion to Starcomms. So net, overall, we've been a beneficiary of the asymmetry of the interconnect regime. So the 6% includes almost ₦1 billion of interconnect price change. So it's not a true reflection of the revenue decline. Now, as you mentioned, the specific decline is due to the pressure on the voice revenues. That's number one. The second piece has to really do with the fact that we launched 10 new cities in the beginning of this year. And traditionally, it takes about a year to two to fill that traffic into those cities and then yield benefits to compensate for the operating expenses. So that also showed a bit of pressure on the revenues. Plus, the third element, which we discussed during the last interview, was the voluntary churn of non-economic subscribers, which we undertook to re-energize the capacity and use it for paying subscribers instead of waste it for customers who were not using the network.
And indeed, that voluntary churn, which you just mentioned, has made ARPUs come up significantly. I calculated about 74% to about 802 naira. But obviously, there's still that big issue about the bottom line, which Starcomms continues to report losses, about 5 billion up to September 2010. When is that going to change? And you did allude to the fact that you might make a big announcement the last time you were here. That might change a bit of that.
Yes, I did. Well, let me just put the numbers as well into perspective. The continued bottom line losses have to do with the continued investment in network expansion, which then really is touched by the depreciation. That's probably the main element that continues to drive the PAT. Now, typical telecom companies are always judged by above the line before the EBITDA line based on revenue improvements, margin improvements, expansion capabilities, operational efficiencies. If you were to look at Starcomms above the line, and if you look at the performance of the business, we had a 27% growth in data revenues. We showed a 20% growth in data subscribers. We showed an 8% improvement in our margin, and the data margin specifically improved by 31%. And those are just some of the few things that Starcom does to continue to drive a profitable business. I agree on the PAT level, there will continue to be pressure purely because as you invest in network expansion, depreciation, which is gathered over the past 10 years of investment, continues to be there. Now, as I promised during the last interview, we have undertaken an effort to begin to look at operational efficiencies from an outsourcing point of view. And one of the major things we just have concluded very recently was a sale and leaseback of 17% of our asset, which was represented by 407 of our towers. But that only includes the passive elements, not the radio frequency equipment or the transmission equipment. That tower sale and leaseback, which yielded $81.4 million in terms of the deal value, for 17% of your assets should remove significant amount of depreciation of the bottom line. Now, the continued investments of this year and also 2011 may not remove the depreciation completely, but it goes a significantly long way to remove that pressure from the bottom line. The second thing that the deal does is it reduces your operational cost, because when you outsource and it's costing you X number of dollars or naira to maintain that base station, the company that's now bought the tower, Swap Technologies, is able to offer us an 18% discount on the OPEX compared to what I was able to do. What also this allows me to do is pay down significant amounts of our debt, which then, and it's reflected in the Q4 numbers when we come to announce it, but you will also see our continued efforts to pay down debt in Q3 resulted in a significant reduction in interest charges and debt. So we're deleveraging the business, improving the net debt to EBITDA position, and looking for operational efficiencies by outsourcing non-core functions.
And then, of course, you did mention that that huge $81 million that you have gained from that deal, obviously, ups your cash position. 2.6 billion as of September 2010. Where are you looking to put that money? More so, given the should I say, the possibility of consolidation in your sector?
You're a very clever man. That's a very good question. I unfortunately cannot specifically speak to any consolidation effort Starcomms is looking to lead. I can't specifically talk about any deals that may be in the process. We are looking at all avenues to allow consolidation to take place, because we've always said from the first time I came on the show 2 years ago, there's too many players in Nigeria, and many of them have marginalized the business by subsidizing unnecessarily and depleting tariffs unnecessarily for prepaid customers. Now, you have seen in the past 12 months significant developments in the market, and Starcomms is hoping to prove that we can continue to build a good business that's sound, that's well managed in Nigeria, and that there is continued opportunity. So the $81.4 million, to answer the question specifically, much of it will go to pay down existing debt and further reduce the debt portfolio of the business. The remaining cash that we will keep, which is roughly about $14.5 to $15 million US, will be kept for expansion and or potential deals that we could be examining in order to solidify the position of the company in Nigeria.
And of course, Bharti Airtel just launched recently in Nigeria. We expected to give the GSM operators at least a run for their money. Of course, the CDMA operators like yourself would also be in that fight for users and consumers. How do you see that entry impacting the market, given Bharti's antecedents in India?
Well, Bharti, or Airtel specifically, what they did, they actually relaunched their brand with their new logo and their new name, which is actually still their existing name, Airtel. So really all they've done is they've just now introduced their brand. They have been in Nigeria for quite a number of months, cleaning up the existing operation and trying to establish operational efficiencies, which is what they do very well, as they have done in India. Some of the challenges of Nigeria having to do with the operational cost are things they can't control. So the only way around that portion of the business is to come operationally efficient in how you produce minutes and at what cost. And that's something we've done very, very well in, and we're experts in managing our business at quite a low cost. So from a low cost point of view of operating the business, we have that expertise. Now, their scale of economies and their size allows them larger purchasing power for handsets, allow them larger purchasing power with vendors in terms of negotiating contracts. But the real thing where they're coming in is they're now looking to efficientize the voice business, and they are speaking into launching a new tariff into the country, which they have not really done yet. The challenge in Nigeria is the interconnect cost. If you're going to launch a very reduced call rate off net, then you're playing what's called predatory pricing below interconnect, which is traditionally non-sustainable. And Airtel is a clever company and they're smart, and I don't think they'll do it for a very long period. If they were to launch a lower rate than currently in the market, which the lowest today by any of the GSM operators is the 25 kobo per second plan, which is 15 naira per minute. If they come anything below that off net, they're then hurting the revenues unnecessarily. The second thing they need to do is grow their on-net community in order to allow the lower cost to translate into profit margins into the business. So we welcome the Airtel interest into the market, because then it brings operational expertise and rationalization into the market, whereby in the past couple of years, we've seen some of the other operators unnecessarily deplete margins and reduce costs.